Well, good evening from here. This is another redefined version of SNR. Yeah, the dump and pump pattern. Just two patterns you needed to know. You needed to integrate. You can integrate it in your trading plan. You can do it on a standalone trading plan of SNR. Yeah. So here we're going to look at the markets from the closing price effect. From the closing price effect, in our basic SNR, I leave emphasis. I talked to you in the manual and in multiples of my video on YouTube channel. I taught you that when market opens at the resistance and closes at support, that means if it opens at the resistance here, goes up to form the high of that session, then comes down to distribute profit and closes lower up here as a bearish market. So that means this is the open. You have this as the open. If this is the open, then this will be the close. It closes at support. Closes at the support. It closes at support. So market opens at resistance. It opens at resistance and closes at support. Yeah. So this makes it to be a bearish market, a bearish trend or a bearish market. So this will be if it closes here, this is going to be the. I told you that where the market closes determines the support and the resistance level. If a candlestick opens and closes lower, that is the support. That is the support. That is the support. If it opens at support and closes at resistance, that is oh God. So I'll talk about that. The bearish trend is where the market closes at support. So they become the support just now, right? Become the support. Then if the market goes in the other way around, it opens here and closes higher. It closes higher as a bullish market, a bullish trend. It closes like that as a bullish trend. That means this is how the price action will be determined. Price opens at support, creates the low, and then distributes profit higher to close above at resistance. Close at resistance. Yeah, so that means here will be market closes at it opens at support and closes at resistance. It closes at resistance. So that's the basic SNR knowledge. So that means here, the bullish candlestick will give us a resistance in this form. Yeah, this is the resistance. So the assumption is that we are looking for price to either break out and continue moving higher in a continuation trend, in continuation of the previous trend, or if it rejects that level as either a pin bar or as an engulfment. So that means you're going to have price moving down in an opposite way. So here, we say price will either move here, reject it, then move to the opposite side as a reversal pattern. Or if it breaks below it, if it breaks and close below it, that means it's going to continue downward. Yeah, it will continue downward as a bearish, and continuation of the previous bearish trend, right? So in the idea, in the psychology of price manipulation, price manipulates at support and resistance level. So that means when price is pushing higher, it's trying to grab a liquidity at the resistance and then distribute lower, right? At every support and resistance, there is a liquidity. So when price moves higher, we give it a time of pumping. It pumps, that means it pumps up. It pumps up. It pumps up. When it goes higher, that is pumping. It pumps up to a particular resistance level and then dumped. It will be dumped for selling. That's distribution of profit after manipulating the resistance, right? After manipulation is to start dumping the higher price. So that means there's a rejection of a higher prices at that resistance level. So we say here is a pump and dump scenario of prices. But when we have it coming down, we say it's dumping into the support area. Yeah, to the support area. Then once the support is rejected, that means the lower prices are rejected and price starts pumping upward. It has reversing the trend from bearish to bullish. So this is pump and dump, right? This is dump and pump, right? In the same way we say a shift in market structure, right? The shift in market structure, we just try to give it another name. This is it. Here, this is a typical example of, okay, let me first of all go into my, yeah. So we say, according to the one market technician, John Smith, that says when one side dumps, the other one pumps, and when one pumps, another one dumps. So that is the same in the market. So we can also look at it that this pump and dump scenario from the weekly activity, Monday to Friday. So Wednesday usually is going to be a range, or in the order after the range, we have the continuation of the original trend or a reversal of it. Yeah, if Monday is downtrend, so probably we're going to have a range into it, a pullback into that downtrend on Wednesday. Then the continuation comes in from Wednesday, Thursday. Or Wednesday will likely going to be a reversal of Monday, Tuesday trend, right? So we are looking at it from the closing angle here. If Wednesday closes here, so then we look at the price, the next price, where after the close of Wednesday session or candle, the next candle will reject and closes higher or lower. So that determines the direction. Here, if we have Monday, Tuesday as a pumping price, as a pumping market, right? And on Wednesday, we have a kind of rejection of that pump price, right, at a price gap or a particular SNR in the past. So possibly there's going to be a dump of that price. So as market is rejecting the higher price at that particular level of support. So Wednesday is going to be either a pullback into this impulse, then in continuation after a pullback, which is, I told you about impulse range expansion. That is the trick of the market. So that means if we have something like this, we have something like this, we have something like this, we have something like this. This is how to determine the trend, a strong trend, a valid trend, right? We have impulse. If it's going to be a strong bullish market, times to create an impulse, a pullback. This is the pullback, the ranging leg, and then an expansion leg of that. That is where we have a. So whenever this expires into a particular SNR or a price gap, if it's expired, the leg of that expansion is tap into SNR, we're likely going to see a dump. Yeah, a dump like this. Yeah. So this is pumping, this is dumping price action, right? So this is what we're going to see. We can see here right now. Today's Tuesday or thereabout. So at the close of Tuesday, we are looking at price to huge higher, which it did. After this is Monday. This is Monday. Then we have price moving up into this, pulling back from today. So we are expecting price to move that way, like this place, then come down again, probably come down. So, and it has already moved. So we want to see, this is Wednesday. Let's look at it from the closing price of Wednesday. The closing price of Wednesday, we see the consistency of this pump and dump and pump scenario. Here, this is Friday. This is Friday, right? Friday closes. This is a pump into a particular resistance in the past, a price gap in the past. We have a Friday market pumping into that price gap. Then at the close of it on Friday, you see price opens here, rejecting the resistance, then closes lower, then it comes down till now. You can imagine that of the effect of, I'm just showing you the effect of closing price. Yeah, almost about there. That's 1,110 pips move after the closing price of Friday. You can see price. This is the closing price of Friday, 22nd of November 2024. This is Sunday. Market opens on Sunday. It opens on Sunday. This is 4 hours. It opens on Sunday and then goes ahead. Then Friday opens after a close of Thursday. This is Thursday. Thursday. This is Thursday, 21st of November, Thursday. This is Friday, 22nd. So the market closes on Thursday as bullish. And you see that it closes as bullish, closes as resistance as a bullish. Let me expand it. It closed as bullish, and what happened? And price moves higher to close above it as a gap. Then the rest becomes what? It becomes a bullish trend. You can imagine the number of pips you have captured onto that. That's almost about 301 pips onto the close of Friday. Then after the close of Friday, that after the pumping, then we have a dump. So this is pump and dump, up and dump. So this is pump. And as price closes below the gap SNR, so we have a pump in place, a dump of a higher price, right? After the pumping, a dump of so you can see at a price gap, So and price moves down, Then you have this on this is Tuesday close. Then Wednesday opens. From Tuesday, we have an impulse, a bullish impulse. Then Wednesday pulls back into it. This is the open of Wednesday. This is the close of Tuesday, closing price, the closing price effect. Then Wednesday opens, trigger off the resistance, and then closes lower. The next become what? The next become a pullback. So if you want to trade into that, you'll have captured probably you'll have captured almost about 172 pips. Then we have after the dump, we have a pump. After this, a pump Wednesday, Thursday. This is so then Friday, Wednesday closes here as a bullish, as a stronger bullish market. It closes higher. Then Thursday opens and then closes above it. And then what we have there is from there we have a buying market into Friday. Thursday closes higher as a bullish market. Then Friday opens and closes higher also. So we already have the rest is bullish market. So let's go to another midweek closing price. This is Thursday. This is Wednesday. 13th of November. And market closes lower as a bearish market, then we have a pump there. So almost about how many pips? So after rejecting this, it closes lower. Then from there, we have almost about 234 pips into the pumping price. Sorry, a dump. So the dump a movement of the market. Then after that, what do we have? On Thursday, Thursday closes here. This is Thursday close. And Friday opens here. It came down. It pulled back into the body. After the close, almost about 107 pips. So at this price gap, pull it back upward. You can see the power of price gap in the closing effect. You see this? This is a price gap, and then it returned it to another price gap. It dumped the price into another price gap, pump into price gap, dump into price gap, pump into a price gap, dump into it, pump higher into a price gap, dump backward into another price gap. Another price gap. It's a price gap, right? Then it pumps higher into this price gap, then a little dump into the body of this price gap, then goes higher. So that's another checklist we'll put in place. But I'm just showing you, I'm not about this in yet, the entry, how to enter or how to sell. Just showing you this consistency of this pump and dump or closing price effect. Yeah, this is Wednesday. This is Wednesday. Close of Wednesday. Oh, sorry. This is Tuesday. Tuesday. This is the close of Tuesday. Close of Tuesday. Tuesday closes here. Tuesday closes here, right? As a resistance, as a bearish, a strong bearish market. Then we have Wednesday opens and closes slightly below it. Then the next candles, you see a manipulation there. So to this is a price gap. This price gap pushed it higher. It retarded the dump, right? And price closes above the Tuesday close. Take note, there's always a reference to the closing price. Past closing, there's always a reference to it. So if market close below it, that means there's a possibility that market is coming downward. If it closes above it, there's tendency that it will start moving higher. So we have that, and I see this continue moving upward. Don't forget, this is a pumping into a price gap, and then we got a dump. After the pump into this price gap, well, we have a dump. Then it closes with an engulfment. An engulfment after the pump with a pin bar. This is a pin bar. That would give you a strong indicator of the end of a pumping price. So, and after pumping price, what do we have? We have pin bar, then engulfment. Yeah, this is a pin bar and price engulfs it. It closes lower, then we trade lower. This is on CPI news. CPI news of the 13th of US CPI news of 13th of November. Yeah, that's after non-farm payroll CPI news. So if you want to trade news, you can also use this closing price. Whenever price engulfs the closing price, the direction, right? So now, but be careful that if it engulfs and it closes as a pin bar, and then the next price pulls and trigger below this thing, then that means there is that's a confirmation. That's a confirmation that there's a shift from pumping into dumping. Pumps, the dumps, then go to this. This is Friday close. This is a Friday close. Friday of 8th of November. It closes as a bearish market, and then on Sunday market opens and trigger off the previous resistance, and then start coming down. On Monday, it continued downward on Monday. That's a huge pips on Monday. And then on Friday, we have, this is Thursday, close. Friday opens and close below it. A pull back into, I told you there's always a reference. A pump back into the close of Thursday. Then a reject with an engulfment, and the price comes down. So with the close, this is the close of Wednesday, 6th of November, as a bearish candle. Then market opens and closes opposite. This is a dump and a pump. So there should be an SNR, which the market which the pump price into. Yeah, that's the SNR there. This is the SNR, and this is a price gap with a price gap. And the market pumps price into this, pumping price into this SNR. Then what will happen? It rejects, and then on Thursday, market opens and closes higher as a bullish market pumping. Yeah, that's pumping, good pumping into this price gap. It's a huge price gap. And then on Thursday, we have a close of Thursday. Then because of this price gap, the ends, that shows the end of a pumping section. Then we resume dump. Right, that is then this is on Tuesday close higher. It closed higher as a bullish candle into its price gap. A pump into the price gap with a bullish candle, and then a pin bar. Yeah, that's an indication that there's a drying up. So markets try to reject a pumping price into that price gap with indication of this price gap. So then what we expect next after the Tuesday closing price, market opens on Wednesday and then closes lower. You can see the move at the opening after rejecting this, then it comes down almost about 166 pips. That's good enough. Then you have the rest becomes what? It becomes that. It becomes a good, a strong bearish trend, bearish market. So almost about the 461 pips. 461 pips. So that is, then we have this before this U.S. unemployment claims, which came up on every Thursday, 31st of October. We already have a dump from the top of that rally. From the top of this pumping, we have a dump, price pump higher. Then it closes on Wednesday. This is the close of Wednesday as a bearish pin bar. So that's an indication that we are having a kind of, we're having an assumption that price will likely will go down. So, and then it opens according to your this thing, then it closes lower. Then the rest becomes what? So it started dumping into the US unemployment claims news hour, and supported the move, the dumping session. Here is Tuesday close. Then we have Wednesday opens and close higher above the closing price of Tuesday. So that's a pumping session. Then we have this as a close of Friday. This is the close of Friday, 25th of October. Then what happens? Price opens on Sunday, comes lower, pull into this body of this, and then this inside it. Then price closes. It can always, there's always a reference to the closing price. So when there's a reference to the pull back into it, so what happens there is what makes it to be more significant. Then we have a close above it. Price breaks out of that closing price of Friday. Then it pull back into it with a rejection. Then it holds higher. This Tuesday. This is Monday close. Monday close, and then Tuesday opens with a high tension of buying. It closes above the Friday close, pull back into it, then goes higher. This is the Wednesday. This is the Wednesday close. Wednesday close. This is Thursday open. So a close of Wednesday determines the what. If a price closes above it, the next market closes above it. That means a bullish bias. If it closes below it, a bearish bias. And you can see that market comes back into it. This is a price gap. A dump, a pump into this price gap. Then we have a Thursday, we close here. Yeah, Thursday closes here. They started dumping. After the close, we have an opening on Friday, which detect that price is still dumping towards this line of a support. Then a pump against the dumping price. This is Tuesday close. Then we have an opening, a Tuesday close as a bearish tiny bar, then a close above it that engulfs the closing price. It engulfs the closing price, and price move higher. And you can imagine the numbers of pips. You can see the price gap here. See the price gap. So you can imagine from this opening to this place, we have almost about 132 pips. That's good enough. So it is possible for you to capture between 80 to 100 pips per after the close of a particular day or a session. You see, this is a Friday close, and after the Friday close, Sunday opens, and it does not close lower. Though it closes as a bearish, a tiny body, but the close does not break below the close of the Friday. Then Monday engulfs it goes higher. So you can imagine the number of pips you'll have captured there into this into the pumping session. That's 193 pips. So it is very, very possible for you to get at least 100 pips on this trading plan. Yeah, and we have this as Monday. Yeah, Monday close, price goes, wow. Monday close is higher to engulf this SNR, then moves higher. Yeah, so, and Monday close above Friday close. And then the rest becomes what? Friday close, Sunday close, then goes higher. The closing price effect. Then we have a dump here into this body of the price gap. Then on Wednesday closes higher after the price gap effect. Then this is the closing of Tuesday. No, this is the closing of Wednesday. Then Thursday opens as a tiny, a spanning top bullish candle. It closes higher, does not close below it. Then a reject into it. pull back into it, you dump, then a pump. After the pullback, it goes higher. Then we have this as this is a Friday close pumping. Then we have a doji, which signify an indecisive market and price closes below the close of Friday. Then what's happening? It comes down. So you can imagine how many number of pips there. Almost about 189 pips. This is Thursday close, Friday opens and closes higher. Price move oil. This is Wednesday close, and Thursday opens and closes higher. It goes up. This is Friday close. Can you see it? Price ranges in between this Friday and session, or more on Monday. Yeah, on Monday, price ranges within the range of that Friday candle. Then it does not close above it, where it closes lower. The rest becomes the Tuesday. How we push downward. Then this is a dump into this. Then we have this Friday. This is Tuesday. Oh no, sorry. This is Wednesday close. Thursday opens and close lower. Came down. That's almost about. Now I show you. You're very, very sure for you to get there. If you know what you are doing, you surely get almost at least minimum of 100 pips. This is 230, 214 pips. Which is good enough. This is close of Wednesday, Friday, close of Friday, and then price came backward. Close. This is a price gap that puts the price lower. This is Wednesday close, price close above and goes up. Wow, that's great. I'm not saying it is 100% power, but at least you can see that this thing is very, very high. The winning rate is very, very high. 282 pips into the pumping session. Every Wednesday, or Tuesday close, Wednesday open, Wednesday close, Thursday open, Thursday close, Friday open. Monday is usually a range. Yeah, right. So it's not good to trade them. I'm not saying can practice it, but focus on, it's rather to focus on Tuesday close, from Tuesday close, Wednesday open, use that. This is Wednesday close. You can see it. Thursday opens and closes higher as a pumping session after the dumping of Wednesday. And goes higher. This is Wednesday. This is Wednesday, 11th of this evening. And it pumps price upward on Thursday. Price opens on Thursday above the Wednesday close, and the rest becomes what is strong with this trend. Yeah. So this is Tuesday close, Wednesday open and close above it. From there you get almost about how many pips? 98 pips. So this is Friday. This Thursday close. Friday opens, goes above it. Above pips, that's almost about 121 pips. Then it closes below it, below Thursday close. We have a big move here. That should be an NFP of 1 period, I think. Yeah. So that is how look at the good. So we look at other market examples. So God bless you. That's just we'll talk about on the VIP that belongs to VIP, how to the detailed trading plan. Yeah.